it's Ariel here from Fix My Books.
And also Jason.
So today we're going to talk about the different types of tax return engagements. So you guys might not be familiar with this, but there are actually different types of engagements that you can have with a tax return. And maybe Jason can explain this. Like, what does it mean, like, to have an engagement?
Well, you're not getting married, but it's basically what will be done in order to complete the tax return. Now, each are a little different, and they go into different layers of, I guess, depth. But the reason why you have these is because it's really setting the scope of what it is the preparer or the CPA is going to do for you. There's also liability factors, but predominantly you're only going to be met with one type. But the reason we really wanted to make this video was because so many people don't seem to understand or comprehend what it is that they're signing when they sign one of these. Like we explain ours fully when we do any sort of engagement, but a lot of people, they'll sign a tax return and they think, oh, my tax return was done by a preparer or a CPA, and, therefore it's audited and checked, all these boxes are ticked, that sort of thing. And that's actually not the case most of the time.
Yeah. So we'll go through the three different ones, and there are three, and we'll explain, what each is and, what use case or like what scenario you would need, a certain type of tax return for. So let's get started. Whoops. Okay, so the three different types are the compilation engagement, or aka notice to reader, the review engagement, and the audit engagement. And it kind of starts with a compilation engagement and then gets more in-depth or like intense as you go up the levels.
Yeah, so the compilation engagement is just the basic one. And yeah, we'll just click through, and this is what 99% of tax returns will be, is a compilation engagement. You'll probably very rarely ever have an audit engagement or a review engagement, especially like even if you own a business.
So maybe we'll explain like what a compilation engagement is, which is like number 4. So it's basically they just compile the information for you. So you have to present your tax preparer or your accountant with a profit and loss, a balance sheet. They're not going to do like the bookkeeping for you. They're just going to compile what you give them. That's
and then
why,
input that information into the tax return. Now, if the person that is doing the tax return for you doesn't even have one of these, or they're not willing to put their rep ID or their company ID on the tax return to file it for you, that's a red flag.
And we've seen that.
We've seen that quite a bit. So it means that they're getting money from you and they possibly are not doing the right job because they don't even want to put their own name on it. Either because they have some issue already with the CRA, they don't have one of these numbers, or they're not even doing their own due diligence. Yeah.
So as we mentioned, 99% of tax returns filed are compilation engagement. This is the most basic type of financial statements. There is no assurance to this as to if the numbers are correct or anything like that. That's why there's something that comes with it called a notice to reader. Okay, so this is like a page or two, and it will say like, whoever is reading this, just so you know,
these statements are unaudited.
Yeah,
exactly,
exactly,
they haven't
like
been
that.
verified for accuracy. We've compiled the information based on what the client has provided, and then we've summarized it into this profit and loss balance sheet, cash flow statement, etc.
Exactly. So it's basically they're kind of like, I would say, kind of washing their hands and saying like, hey, like we got this information for someone else, so if there's anything wrong with this, like it's because of their the numbers they gave us. It's not anything we did.
Yeah, we didn't do
basically.
anything wrong. But if you're receiving one of these and you read this and you go, oh, well, I'm kind of scared to sign this. This is
very normal.
This is very normal. It's 99.9% of what you'll ever see in terms of a tax return. No one is going. It's very rare that a CPA is going to do an audit engagement for your personal tax return or business tax return.
Yeah.
It's just unless you want to do that and they want to charge you and you want to accept a charge of $10,000 or more.
Yeah.
But yeah.
So as we mentioned, there is no verification of the accuracy or completeness of the numbers. It provides no assurance as to the accuracy of the numbers. So do you want to
get into what assurance really is? It's really verifying.
Yeah, so assurance. So the other two engagements, so this is the compilation engagement, but the review and the audit engagement both provide assurance. So assurance is they've checked, they verified the numbers, and like the review and the audit are different. Even though they both provide assurance, it's the level of assurance that's different between the two of them.
An extra level of verification.
But this one, it provides no assurance because, again, they don't verify anything. They just compile the numbers, right? And then it's, again, most of the time, this is what you need because honestly, most people, they just want to file a tax return to comply with the government. They don't really need to see like a balance sheet or anything like that. So it's used internally by the owner or to meet compliance obligations like with the CRA or in the US, the IRS, right? So again, the client or the management, meaning the people at the company, is responsible for the production of financial statements. And when we say financial statements, again, this is the profit and loss, balance sheet, general ledger, etc.
So the Schedule 100 and Schedule 125, like on a T2 tax return, or, on your, just for example, the T1 tax return, your T2 125, the financial statement there, which is profit and loss, balance sheet, etc., that's your responsibility as a client or the client's responsibility to make sure that that's accurate. Mm-hmm. So it's being filed by the accountant or the CPA or the tax preparer, but they are not responsible for that.
And this is also the only type of engagement that tax preparers can do because, again, the other two provide
assurance, which a tax preparer cannot provide. That only a CPA can provide that.
Exactly. So just note that. Next. Okay, so these are the review engagements. So it's one step higher than the compilation engagement. So this is one of the two types of engagement that do provide assurance. However, as you can see in number 2,
very limited.
Yes, it's limited assurance.
So you may be thinking, oh, well, even though it's limited, they must be doing so much more. But when you get down into the nitty gritty of it, it really isn't that much more.
Yeah. So they assess the financial statements if they are plausible and follow the general GAAP, so GAAP is generally accepted accounting principles, and the financial statements are, as a whole, free from material misstatements. So it means like there's nothing weird in your financial statements, like a negative asset,
Unless it's a contra asset, but
yeah,
like negative expenses,
Yeah, exactly.
Negative revenue is always a funny one. That can happen, but very special circumstances.
Refunds, right? If your refunds are larger than your sales, things like that. But as a whole, you should not be seeing those in like a normal financial statement. So if you're thinking, oh, so what does that mean? Like if they're gonna review some things, like are they gonna review?
My receipts, are they looking at every single transaction? No, it's not that deep.
Yeah. So this is more of the analytical procedures. of your company, discussions with the client, which is you, to ensure the plausibility of the financial statements. Meaning, they're going to ask you, how would you record, let's say, what is your accounts payable process? Something like that.
Or how did you come to your COGS? What's your inventory tracking process?
Yeah, exactly. So nothing looks too wrong with the financial statements, meaning, let's say your COGS, your cost of goods sold, is like, it's not like 90% of your sales. That's definitely something weird is going on with that, right? And this is usually provided to third-party users to comply with loan or franchise agreements.
More commonly loan agreements,
yeah.
But sometimes you will see franchise agreements.
So you notice how the first one is just like to comply with
just basic government reporting standards. The next level up is you're having to give these to a third party.
Yeah, exactly.
Which isn't the government.
Yeah. So it does not involve extensive verification or confirmation of financial information. Again, they're not going here. They're not sitting and checking your invoices.
Calling up your suppliers to make sure that this is a legit.
Yeah,
invoice.
This is not that is not what a review engagement is. It provides some assurance, but again, it's limited in its scope.
Like if you were looking at a ladder and it had 10 rungs to it. The compilation engagement is the bottom rung. This is like 2 more rungs up.
Yeah. Okay. And last is the audit engagement. So again, it is one step higher than review engagements. It is the most rigorous and comprehensive of the 3 types of engagements. It is a deep dive into the financial records of a company, and this is when independent auditors examine your financial statements, underlying transactions, and internal controls. So underlying transactions, that's when they actually check the receipts.
Yeah, so before we were talking about the internal controls and the review engagement, and now you're going another step further and you're really looking at the ins and outs of the transactions.
Yep. So this provides the highest level of assurance that the financial statements are free from material misstatements.
So, as we said before, this is, the job of a CPA. This is what you'd be paying a large sum of money to a CPA for.
And this is when, again, they examine source documents, so invoices, bank statements. So let's say if your balance sheet says as of December 31, and that's, let's say, your year end, as of December 31, this is the balance of your bank account in your balance sheet. They're going to check that against the actual bank statement if that matches. Some things like that. And this also comes with a management letter that includes the evaluation of your internal controls and recommended improvements. So again, this is more their
higher level.
Yeah.
So it's not just evaluating what you've done, but it's also looking at ways that things can be better to make sure that there are no issues going forward. And really, as we said before, you got the compilation engagement to sort of comply with government agencies, and then you had the review engagement to provide some level of assurance to basic third-party stuff. And now you've got the audit engagement, which is kind of, these 2 things combined, but the third parties can be, much more extensive. So in the US, you'd know very commonly that they've got a lot of stocks and all those financials that need to be provided, and their quarterly reports, annual reports, need to be audited. So this would be an example of making sure that everything within the company is sound. And obviously, nothing is perfect because, you've got your Enrons. But, this is the highest level you're going to get.
This could also be required if you're planning to sell your company. Even if you're like a private company, you're not required by the government to, have an audit engagement. If there was a buyer of your company and they want to do some, due diligence, they may ask for this.
Also, if you did want to sell your company, it may be beneficial for you to just get this one done off the bat, and then have it prepared so you could just hand it out immediately. It's like when buyers are looking to purchase a company and they like to see that the company already has all its trademarks, right? Because they don't want to run into any sort of issues with regards to copyright infringement, trademark infringement, etc. down the road. It's a more saleable company.
Yeah. So again, 99% of the time, you're just going to see a compilation engagement. And then if required, you may, have to have like a review type of engagement or audit engagement, depending on, how large the company is. If you're publicly listed, then it's going to be required by the government. If you want to sell your company, whoever is buying it might require you to have an audit engagement or a review engagement. So it just depends on the situation. But as a normal business owner and normal like business operations, you're not selling your company, you're probably going to go with a compilation engagement.
Yeah. So when you read a compilation engagement, should you read one that should be provided by, your tax preparer or CPA or whatever, don't be alarmed that it says that, oh, this is compiled based on the information you've provided us and, it hasn't been reviewed for accuracy, etc. That's just terminology.
Yeah.
It's not something to worry about because, you don't want to pay extra for a review engagement or an audit engagement if you don't need one.
Oh, of course, it gets more expensive. The more in-depth they have to go, the more expensive.
Yeah, the more time they have to waste
exactly.
looking at your processes and procedures, then, the more expensive it's going to get.
Yeah. Okay, so that's it for now. If you guys have any questions, please comment them down below. And once again, this is Arielle.
And Jason.
From Fix My Books. Have a great day.
Cheers.